Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thank you for having me.
A pattern I've noticed, I'm calling it kind of a step-down correction, where you have 2 or 3 days down, then a step up, and then another 2 or 3 days down. Also, the TSX, the Toronto Exchange, had, I think, about 12 straight days of going up. Not a lot each day, but still going up. How does that compare to what's happening with the Dow right now?
Well, looking at it cyclically, I look at everything through slightly different eyes, but looking at it cyclically, we knew that an intermediate degree low was looming, and there was some question whether that intermediate degree low had occurred in October or if we were moving into it in December. There was some overlap with the timing there, and it is proven that it was December. And so, everything is pretty much bounced out of the same time frame and the same degree low. So, I think that what we have seen is based on the higher degree work that was, like I said, an intermediate degree bounce, and that this bounce it's at a juncture now where it can come to conclusion, and then I think once it does, and a sell signal is triggered, then we resume to the downside into the higher degree cycle lows. That's what I see now. So I think it's counter trend. I think this advance this month that we've seen pretty much across the board is counter trend.
So where do we go from here?
I believe we go lower. I mean, the work still suggests that higher degree lows are ahead. So once the counter trend runs its course and the stage is set up for the continuation, we need to get a sell signal, and then once that happens, the risk is going to be on again. And, the potential is, I think, much greater than people realize. This is, like we said, I don't remember if you said it when we first came on or if you said it before we came on the air, but it's kind of like the patch of blue sky, and people are looking at it and wondering if the storm is past or not. And I don't think so. I don't think that's, I don't think so. I think it's much more risky than people realize here.
Right. I think pilots call it a sucker hole. You see a patch of blue, you head for it, but by the time you get there, it's closed in again, and you can't see where you're going, and you're in trouble.
Yeah, and then there's an old term in the in the markets of a bull trap, and that's what I think it is. We're at a technical juncture where it can come to conclusion. Need to see if it materializes. Maybe it's not done just yet, but we're in a juncture where it could be.
Now, I always ask about specific sectors and so on, but are they all being lumped together when we're in a situation like this?
Well, everything moves. I look at the cycles, and everything moves to a similar cycle, similar rhythm, if you will. I want to say everything, most equity indexes averages, be it Canadian or American or, the FTSE or whatever. The pattern is much the same. The magnitude of the advances and declines are, different, in some cases, in most cases. I mean, some things lead, some things lag, and there can be some timing differences, but when you overlay, it's a simple process of overlaying the charts, and when you have a means of identifying and understanding the degree of the low, be it a short-term low, intermediate-term low, or, a cycle of annual degree, or even the longer term 4-year cycles and so forth, they're all moving to a somewhat similar rhythm. But it can be, like I said, the magnitude of the advances and declines within that rhythm that can vary. But yeah, it's all moving together. And, like I said, based on that higher degree pattern, I think that lower prices, at least at this juncture, nothing has been mended to suggest otherwise, that lower prices should lie ahead.
Are there certain sectors that move down faster than others?
Well, of course, I had been saying, through most of last year that there were leading indexes, averages, and sectors, and we saw that the airlines led, housing led, automotive led. Looking at some of the foreign sectors, the CAC, the DAX, the FTSE, the stocks 600, European, a broad European average, the Canadian market led somewhat. So the U.S., mainly the industrials and the S&P, were the laggers, but still the pattern's the same, and they're all set up in a very similar pattern at this point, a very similar technical setup, I should say. And again, I think that the higher degree points down.
We'll have more with Tim Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's your take on oil right now?
Oil has been in a counter trend advance as well. Intermediate degree, in it bottom is a good example. It also bottomed with an intermediate term cycle low, and pretty much in conjunction with equities late December. Same thing with the broader CRB index, intermediate degree bounce that, is in a position to have run its course. It's an opportunity. Let me say it that way. It's an opportunity at this point, to cap it. Need to see a short-term sell signal and then an evolution from there into, an intermediate degree signal and some structural stuff to prove that it's topped. But long story short, it's counter trend. Need to see the setup to cap it.
Is gold going to make a major breakout?
Nope. I think, gold has been in a cycle of, let's say, how do I say this? I have a short and intermediate and then a slightly longer term cycle, and then the 9-year cycle. And it's been in that slightly longer term than little better than intermediate degree, if you will, advanced out of the August low. And, it's been a nice advance, no question about that. But again, I think it's counter trend, but of higher degree. Nothing has changed with gold with regard to the evidence of the higher degree 9-year cycle top. So we've enjoyed a nice counter trend, extended counter trend rally, but I think that's all there is to it. And that ultimately I think gold and crude oil and pretty much everything is going to be setting up to go down together.
We'll have more with Tim Cyclesman Wood right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, do you have any take on what's going to happen with U.S. interest rates?
Well, we had a higher degree. Yes, I do. We had a higher degree cycle low in October. And I think that it was a nesting. When I say higher degree, I think it was a nesting of, obviously short, intermediate, and even longer degree. And when I say longer degree, there's a 3-year cycle in bonds. And so I think that what we saw was the 3-year cycle low, in bond prices in October. Now, within the context of, the much longer term, I think that this 3-year cycle advance is going to be a counter-trend advance of, like I said, a 3-year cycle, so it's of much higher degree. But I do believe that ultimately this 3-year cycle advance will be like a failure, a retest, if you will, of the 2016 high. And then I think, that it's going to leave bonds then set up to go much lower, which means interest rates go much higher. I don't know, at this point when that 3-year cycle is going to top. I mean, evidence has to appear. And right now, I don't have that evidence, to say that 3-year cycle top has peaked. I'm not expecting it this soon. I think it's down the road a little bit, but, for now, we have an intermediate degree top in bonds, and then I think once we move down into the intermediate degree cycle low, the bonds are going to go higher, which means rates will go lower, and then bonds will continue up into that 3-year cycle top, which equates to, of course, lower rates.
Now, with the U.S. Treasuries, the 2-year Treasury is now higher than the 5-year Treasury. Is that a concern?
I know, yes, a lot of people look at that, and, I don't personally do any work with that, but yes, I get it is a concern, but I don't have any statistics in my own work that I can point to that. I'm looking, strictly at the 30-year and the cycle in the 30-year.
Do you have any outlook for the agricultural commodities?
Pretty much the same. It's going to track and follow the CRB. We do have, let me say this, we do have in oil, the CRB complex, which includes agricultural. We do have a higher degree 3-year cycle low coming due later this year. And so I think we get a push down into that low, probably in conjunction with equities. And then there'll be a nice bounce in crude oil and the entire commodity complex from those lows.
Tim, what's your overall message today?
Well, I guess the overall message is that this is it is. I think it's based on the long-term data and the fact that nothing has been mended with this rally. I think this is possibly the calm before the storm. I think the risk is much higher than people probably believe at this point. I think most people probably believe that it was over with the decline into the December low. I don't see that at this point. The higher degree, nothing has been mended. Could that change? Of course it could, but at this juncture it has not, and I think that the risk is higher than people believe. And I think that there could be a surprise that takes the market lower, into the higher degree 4-year cycle low.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have questions for Tim or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.